Certified Public Accountant Licensure Examination. Subject: Management Advisory Services, MAS. Question number 1. Management accounting versus financial accounting. Which of the following best distinguishes management accounting from financial accounting? A. Management accounting follows PFRS standards strictly. B. Management accounting provides information primarily for external users such as investors and creditors. C. Management accounting focuses on providing relevant information for internal decision-making without being bound by PFRS. D. Management accounting reports are required to be audited by an independent CPA. Correct answer: C. Management accounting focuses on providing relevant information for internal decision-making without being bound by PFRS. Why C is correct? Management accounting is designed for internal users, managers and executives, to support planning, controlling, and decision-making. It is not governed by PFRS, giving management flexibility to use any format or basis that is relevant and useful. Why the others are wrong? A. is incorrect because it is financial accounting, not management accounting, that must comply with Philippine Financial Reporting Standards, PFRS. B. is incorrect because financial accounting, not management accounting, serves external users such as investors, creditors, and regulatory bodies like the SEC and BIR. D. is incorrect because management accounting reports are internal documents and are not required to undergo independent audit. External financial statements are subject to audit requirements. Edge knowledge. Key phrase: internal decision-making equals management accounting. Anything mentioning external users, PFRS, or audit equals financial accounting. Question number 2. Cost classification, behavior. Jollibee's Batangas branch incurs electricity costs that include a fixed monthly charge of 3,000 pesos plus 0.50 pesos per machine hour used. How is this cost classified? A. Fixed cost. B. Variable cost. C. Mixed, semi-variable cost. D. Step cost. Correct answer: C. Mixed, semi-variable cost. Why C is correct? A mixed cost, also called semi-variable cost, contains both a fixed component and a variable component. The 3,000 pesos monthly charge is fixed regardless of usage, while the 0.50 pesos per machine hour is variable. Both elements are present, making this a mixed cost. Why the others are wrong? A. is incorrect because a purely fixed cost does not change with activity level at all. This cost changes as machine hours change due to its variable component. B. is incorrect because a purely variable cost starts at 0 and increases proportionally with activity. This cost does not start at 0, it has a 3,000 pesos fixed base. D. is incorrect because a step cost remains fixed over a range of activity but jumps in steps to a new fixed level. This cost has a continuous variable element, not discrete steps. Edge knowledge. If a cost has two parts, a flat amount plus a per unit charge, it is always a mixed, semi-variable cost. Look for the formula. Total cost equals fixed amount plus variable rate times activity. Question number 3. High-low method. SM Department Store reports the following maintenance costs. Highest activity of 8,000 units at 180,000 pesos and lowest activity of 3,000 units at 105,000 pesos. What is the variable cost per unit? A. 12.00 pesos. B. 15.00 pesos. C. 18.00 pesos. D. 22.50 pesos. Correct answer: B. 15.00 pesos. Why B is correct? Using the high-low method, variable rate equals cost at high minus cost at low, divided by high units minus low units, equals 180,000 pesos minus 105,000 pesos, divided by 8,000 minus 3,000, equals 75,000 pesos divided by 5,000 equals 15.00 pesos per unit. Why the others are wrong? A. is incorrect. This does not result from the proper high-low formula. Dividing incorrectly or using wrong data points leads to this erroneous figure. C. is incorrect. This would result if the cost difference were divided only by the low activity level. 3,000 units plus 1,167 equals error, an incorrect denominator. D. is incorrect. This would be obtained by dividing only the high cost, 180,000 pesos, by the high activity, 8,000, which is not the correct high-low formula. Edge knowledge. High-low formula. Delta cost divided by delta units equals variable rate. Always take the difference of both cost and units from high and low data points only. Question number 4. Contribution margin. A product sells for 200 pesos per unit with variable costs of 120 pesos per unit. Fixed costs total 400,000 pesos. What is the contribution margin ratio, CMR? A 40%, B 50%, C 60%, D 80%. Correct answer, A 40%. Why is correct? Contribution margin per unit equals selling price minus variable cost equals 200 pesos minus 120 pesos equals 80 pesos. CMR equals CM per unit divided by selling price equals 80 pesos divided by 200 pesos equals 40%. The CMR tells management what percentage of each peso of sales is available to cover fixed costs and generate profit. Why the others are wrong? B is incorrect. A 50% CMR would require variable costs of exactly 100 pesos, 50% of 200 pesos. Here, variable costs are 120 pesos, yielding only 80 pesos CM. C is incorrect. This would result if CM were 120 pesos and selling price 200 pesos, but 120 pesos is the variable cost, not the CM. D is incorrect. This figure would arise from an error such as dividing fixed costs by selling price rather than computing CM correctly. Edge knowledge. CMR equals CM divided by selling price. Quick check. CM equals SP minus VC. Then divide CM by SP. Do not include fixed costs in the CMR formula. Question number 5. Break-even point. Using the same data in question 4, how many units must be sold to break even? A. 3,000 units. B. 4,000 units. C. 5,000 units. D. 6,000 units. Correct answer. C. 5,000 units. Why C is correct? Break-even units equals fixed costs divided by CM per unit equals 400,000 pesos divided by 80 pesos equals 5,000 units. At this volume, total contribution margin equals total fixed costs, resulting in zero profit. Why the others are wrong? A is incorrect. At 3,000 units, CM equals 3,000 times 80 pesos equals 240,000 pesos, which does not cover the 400,000 pesos fixed costs. Still a loss of 160,000 pesos. B is incorrect. At 4,000 units, CM equals 320,000 pesos, which still falls 80,000 pesos short of covering fixed costs of 400,000 pesos. D is incorrect. At 6,000 units, profit equals 80 pesos times 6,000 minus 400,000 pesos equals 80,000 pesos. This is above break-even, not at it. Edge knowledge. BEP, units, equals fixed costs divided by CM per unit. This is one of the most tested formulas in MAS. Memorize it. Question number 6. Target profit, CVP. Continuing from question 4, how many units must be sold to earn a target profit before tax of 120,000 pesos? A. 5,500 units. B. 6,000 units. C. 6,500 units. D. 7,000 units. Correct answer. C. 6,500 units. Why C is correct? Units for target profit equals fixed costs plus target profit divided by CM per unit equals 400,000 pesos plus 120,000 pesos divided by 80 pesos equals 520,000 pesos divided by 80 pesos equals 6,500 units. Why the others are wrong? A is incorrect. 5,500 times 80 pesos equals 440,000 pesos CM, and after deducting 400,000 pesos fixed costs, profit equals 40,000 pesos, not 120,000 pesos. B is incorrect. 6,000 times 80 pesos equals 480,000 pesos CM, 480,000 pesos minus 400,000 pesos equals 80,000 pesos profit, still 40,000 pesos short of the target. D is incorrect. 7,000 times 80 pesos equals 560,000 pesos CM, 560,000 pesos minus 400,000 pesos equals 160,000 pesos profit, 40,000 pesos over the target, not exactly 120,000 pesos. Edge knowledge. Add target profit to fixed costs before dividing by CM per unit. Formula. FC plus target profit, divided by CM per unit. Question number 7. Margin of safety. A company's actual sales are 1 million pesos and its break-even sales are 750,000 pesos. What is its margin of safety ratio? A 20%, B 25%, C 30%, D 75%. Correct answer. B 25%. Why B is correct? Margin of safety equals actual sales minus break-even sales equals 1 million pesos minus 750,000 pesos equals 250,000 pesos. Margin of safety ratio equals 250,000 pesos divided by 1 million pesos equals 25%. This indicates how much sales can drop before the company incurs a loss. Why the others are wrong? A is incorrect. A 20% ratio would imply MOS of 200,000 pesos, which would require break-even sales of 800,000 pesos, not 750,000 pesos. C is incorrect. A 30% ratio would imply MOS of 300,000 pesos, requiring break-even sales of 700,000 pesos, which differs from the given data. D is incorrect. This is the ratio of break-even sales to actual sales, 750,000 pesos divided by 1 million pesos, not the margin of safety ratio, a common misdirection. Edge knowledge. MOS ratio equals actual sales minus B sales, divided by actual sales. Dividing BEP by actual sales gives you the opposite, watch out for that trap. Question number 8. Operating leverage. A firm has a contribution margin of 600,000 pesos and net operating income of 150,000 pesos. What is the degree of operating leverage, DOL? A2, B3, C4, D5. Correct answer. C4. Why C is correct? Degree of operating leverage, DOL, equals contribution margin divided by net operating income equals 600,000 pesos divided by 150,000 pesos equals 4. A DOL of 4 means that for every 1% increase in sales, operating income increases by 4%. Why the others are wrong? A is incorrect. A DOL of 2 would require net operating income of 300,000 pesos, not 150,000 pesos. B is incorrect. A DOL of 3 would require NOI of 200,000 pesos. The actual NOI of 150,000 pesos produces a higher leverage ratio. D is incorrect. A DOL of 5 would require NOI of 120,000 pesos. While close, 150,000 pesos NOI results in a DOL of exactly 4, not 5. Edge knowledge. DOL equals CM divided by NOI. Higher DOL equals higher risk, reward. Companies with large fixed costs tend to have high DOL. Question number 9. Relevant costing, make or buy. ABC Manufacturing currently makes a component at a variable cost of 50 pesos, fixed cost of 20 pesos, 15 pesos unavoidable, and an outside supplier offers it at 60 pesos. Should the company make or buy? A. Buy, saves 10 pesos per unit. B. Make, saves 5 pesos per unit. C. Buy, saves 5 pesos per unit. D. Make, saves 10 pesos per unit. Correct answer. B. Make, saves 5 pesos per unit. Why B is correct? Relevant cost to make equals variable cost plus avoidable fixed cost equals 50 pesos plus 20 pesos minus 15 pesos equals 50 pesos plus 5 pesos equals 55 pesos. Buy cost equals 60 pesos. Since making costs 55 pesos versus buying at 60 pesos, the company saves 5 pesos per unit by continuing to make. The 15 pesos unavoidable fixed cost is irrelevant, it will be incurred regardless. Why the others are wrong? A is incorrect. Buying at 60 pesos is more expensive than making at 55 pesos, there is no saving from buying. This option ignores that only the 5 pesos avoidable fixed cost is relevant. C. Incorrect. Buying is the more expensive option at 60 pesos versus 55 pesos to make. This option confuses the direction of the comparison. D is incorrect. The savings from making is 5 pesos, not 10 pesos. A 10 pesos saving would only arise if all fixed costs, 20 pesos, were avoidable, which is not the case here. Edge knowledge. Make or buy. Compare buy price versus variable cost plus avoidable fixed costs only. Unavoidable fixed costs are sunk, exclude them. Question number 10. Special order decision. A company operates at 70% capacity. Its normal variable cost is 80 pesos and fixed cost per unit is 30 pesos. A special order of 1,000 units at 95 pesos each is received. Should management accept? A. Reject. The price is below full cost of 110 pesos. B. Accept. It contributes 15 pesos per unit to profit. C. Reject. Accepting will disrupt normal operations. D. Accept. It covers all fixed costs. Correct answer. B. Accept. It contributes 15 pesos per unit to profit. Why B is correct? Since the company has excess capacity, 30% fixed costs will not increase with the special order. Therefore, only variable cost of 80 pesos is relevant. CM per special order unit equals 95 pesos minus 80 pesos equals 15 pesos. Accepting contributes 15 pesos times 1,000 equals 15,000 pesos to profit. Why the others are wrong? A. Is incorrect. Full cost, 110 pesos, includes fixed costs that are already committed and will not increase. They are relevant for this decision. Only incremental costs matter. C. Is incorrect. Since the company is at only 70% capacity, the extra 30% capacity can absorb the special order without disrupting regular production. D. Is incorrect in its reasoning. Fixed costs are not covered by the special order price because fixed costs exist regardless. The reason to accept is the positive contribution margin. Edge knowledge. Special order with excess capacity. Compare special price versus variable cost only. Fixed costs are irrelevant, already incurred. Question number 11. Transfer pricing. Division A transfers goods to Division BA's variable cost is 40 pesos and it has no excess capacity. External market price is 70 pesos. What is the minimum transfer price that Division A should accept? A. 40 pesos. B. 55 pesos. C. 70 pesos. D. 110 pesos. Correct answer. C. 70 pesos. Why C is correct? Minimum transfer price equals variable cost plus opportunity cost, contribution margin foregone. When there is no excess capacity, Division A must give up external sales to transfer internally. Opportunity cost equals external price minus variable cost equals 70 pesos minus 40 pesos equals 30 pesos. Min TP equals 40 pesos plus 30 pesos equals 70 pesos. This equals the external market price. Why the others are wrong? A. Is incorrect. Accepting only variable cost ignores the opportunity cost. Division A would be foregoing a 30 pesos contribution margin per unit it could earn externally. B. Is incorrect. 55 pesos has no logical basis under the transfer pricing formula and represents neither the variable cost, market price, nor the sum of variable cost and opportunity cost. D. Is incorrect. This would double count the variable cost. TP is not variable cost plus market price but rather variable cost plus opportunity cost. Edge knowledge. Minimum TP equals VC plus opportunity cost. With no excess capacity, opportunity cost equals CM foregone, market price minus VC. With excess capacity, opportunity cost equals 0. Question number 12. Standard costing, direct materials variance. Standard, 5 kilograms at 10 pesos per kilogram. Actual, 5,200 kilograms used at 9.50 pesos per kilogram for 1,000 units. What is the materials price variance? A. 2,600 pesos favorable. B. 2,600 pesos unfavorable. C. 5,200 pesos favorable. D. 2,000 pesos favorable. Correct answer. A. 2,600 pesos favorable. Y is correct. Materials price variance, MPV, equals standard price minus actual price times actual quantity purchased, used equals 10 pesos minus 9.50 pesos times 5,200 equals 0.50 pesos times 5,200 equals 2,600 pesos favorable. Since actual price is less than standard price, the variance is favorable. The company spent less per kilogram than planned. Why the others are wrong? B. Is incorrect. 2,600 pesos unfavorable would mean actual price exceeded standard price. Here, 9.50 pesos less than 10.00 pesos, so the variance is favorable, not unfavorable. C is incorrect. 5,200 pesos would result from using the full 1.00 pesos difference. This appears to double the 0.50 pesos variance per kilogram, which is a computational error. D is incorrect. 2,000 pesos would result from multiplying 0.50 pesos by 4,000, using the wrong quantity, standard quantity, instead of actual quantity in the price variance formula. Edge knowledge. MPV equals SP minus AP times AQ. Favorable equals AP less than SP. Unfavorable equals AP greater than SP. Memorize the sequence. Standard minus actual for price variance. Question number 13. Standard costing, direct materials quantity variance. Using data from question 12, what is the materials quantity, usage, variance? A. 1,000 pesos favorable. B. 2,000 pesos unfavorable. C. 2,000 pesos favorable. D. 5,200 pesos unfavorable. Correct answer. B. 2,000 pesos unfavorable. Why B is correct? Materials quantity variance, MQV, equals standard quantity allowed minus actual quantity used times standard price equals 1,000 times 5 minus 5,200 times 10 pesos equals 5,000 minus 5,200 times 10 pesos equals negative 200 times 10 pesos equals 2,000 pesos unfavorable. More materials were used than the standard allowed, making this unfavorable. Why the others are wrong? A is incorrect. A favorable variance would mean actual usage was less than standard. Here, 5,200 kilograms used exceeds the 5,000 kilograms standard, indicating inefficiency. C is incorrect for the same reason as A. The variance is unfavorable, excess usage, not favorable. The amount of 2,000 pesos is correct, but the direction is wrong. D is incorrect. 5,200 pesos unfavorable is not derived from any correct formula. This appears to be actual quantity times standard price with a sign error. Edge knowledge. MQV equals SQ minus AQ times SP. If AQ greater than SQ to unfavorable. If AQ less than SQ to favorable. Always use standard price in the quantity variance formula. Question number 14. Standard costing, labor variances. Standard. 2 hours at 60 pesos per hour. Actual. 2,100 hours worked, 58 pesos per hour, for 1,000 units. What is the labor efficiency variance? A. 6,000 pesos unfavorable. B. 6,000 pesos favorable. C. 4,200 pesos favorable. D. 4,200 pesos unfavorable. Correct answer. A. 6,000 pesos unfavorable. Why is correct? Labor efficiency variance equals standard hours allowed minus actual hours times standard rate equals 1,000 times 2 minus 2,100 times 60 pesos equals 2,000 minus 2,100 times 60 pesos equals negative 100 times 60 pesos equals 6,000 pesos unfavorable. Workers used more hours than the standard allowed. Why the others are wrong? B is incorrect. 6,000 pesos favorable would require actual hours to be less than standard hours, e.g., 1,900 hours. Since 2,100 greater than 2,000, the variance is unfavorable. C is incorrect. 4,200 pesos would result from using the actual rate, 58 pesos, instead of the standard rate, 60 pesos. The efficiency variance always uses the standard rate. D is incorrect on the amount. While the direction, unfavorable, is correct, 4,200 pesos uses the wrong rate. The correct amount is 6,000 pesos using the standard rate of 60 pesos. Edge knowledge. Labor efficiency variance, SH minus AH, times SR always use standard rate. Labor price, rate variance uses actual hours times, SR minus AR. Question number 15. Flexible budget. A company prepares a static budget for 10,000 units with variable costs of 25 pesos unit and fixed costs of 200,000 pesos. Actual output was 12,000 units and actual total costs incurred were 530,000 pesos. What is the flexible budget variance? A. 30,000 pesos favorable. B. 30,000 pesos unfavorable. C. 70,000 pesos favorable. D. 70,000 pesos unfavorable. Correct answer. B. 30,000 pesos unfavorable. Why B is correct. Flexible budget at actual output, 12,000 units, equals variable cost plus fixed cost equals 12,000 times 25 pesos, plus 200,000 pesos equals 300,000 pesos plus 200,000 pesos equals 500,000 pesos. Flexible budget variance equals actual costs minus flexible budget equals 530,000 pesos minus 500,000 pesos equals 30,000 pesos unfavorable. Because actual costs exceeded the flexible budget, the variance is unfavorable. Costs were not well controlled at the achieved output level. Why the others are wrong. A is incorrect. A favorable variance means actual costs are less than the flexible budget. Here, actual costs of 530,000 pesos exceed the flexible budget of 500,000 pesos, indicating a cost overrun. The variance is unfavorable, not favorable. C is incorrect. 30,000 pesos favorable would mean the company spent less than the flexible budget, the opposite of what occurred. The direction is wrong. Actual costs exceed the flexible budget, making the variance unfavorable. D is incorrect. 70,000 pesos unfavorable has no valid basis under the flexible budget approach. The static budget totals 450,000 pesos, 10,000 times 25 pesos plus 200,000 pesos. The static budget variance equals 530,000 pesos minus 450,000 pesos equals 80,000 pesos, not 70,000 pesos. Under the flexible budget, 500,000 pesos, the variance is 30,000 pesos unfavorable. The 70,000 pesos figure is simply a distractor with no correct computational basis. Edge knowledge. Flexible budget variance equals actual cost versus flexible budget, budget restated at actual output. Step 1. Recompute budget at actual units. Step 2. Compare to actual costs. If actual, flexible budget to unfavorable. This variance measures cost control, not volume changes. Question number 16. Responsibility Accounting, Investment Center. Division 10 has net operating income of 900,000 pesos, average operating assets of 6 million pesos, and minimum required rate of return of 12%. What is the residual income? A. 120,000 pesos. B. 180,000 pesos. C. 900,000 pesos. D. 720,000 pesos. Correct answer. B. 180,000 pesos. Why B is correct. Residual income equals net operating income minus required rate of return times average operating assets equals 900,000 pesos minus 12% times 6 million pesos equals 900,000 pesos minus 720,000 pesos equals 180,000 pesos. Positive residual income means the division is earning above its required return. Why the others are wrong. A is incorrect. This does not result from the RI formula. It appears to be an arithmetic error, perhaps 12% of 1 million pesos subtracted from something. C is incorrect. This is merely the net operating income, it ignores the minimum return requirement. RI specifically accounts for the cost of capital. D is the minimum required earnings, 12% times 6 million pesos, which is the capital charge, not the residual income itself. RI is what remains after deducting this amount. Edge knowledge. RI equals NOI minus RRR times operating assets. If RI is positive, value is created. ROI equals NOI divided by operating assets, different formula. Question number 17. Return on investment, ROI. Using data from question 16, what is the return on investment, ROI, of division X? A. 10%, B. 12%, C. 15%, D. 18%. Correct answer. C. 15%. Why C is correct. ROI equals net operating income divided by average operating assets equals 900,000 pesos divided by 6 million pesos equals 0.15 equals 15%. Since ROI, 15%, exceeds the required rate of return, 12%, the division is creating value for the company. Why the others are wrong. A is incorrect. A 10% ROI would require NOI of 600,000 pesos with the same 6 million pesos asset base. The actual NOI is 900,000 pesos. B is incorrect. 12% is the required minimum rate of return, not the actual ROI. The actual performance, 15%, exceeds this threshold. D is incorrect. An 18% ROI would require NOI of 1,080,000 pesos, which is 180,000 pesos more than the actual 900,000 pesos NOI. Edge knowledge. ROI equals NOI divided by average operating assets. It is also expressed as profit margin times asset turnover, DuPont formula. Question number 18. Capital budgeting, payback period. A machine costs 2,400,000 pesos and generates annual cash inflows of 600,000 pesos. What is the payback period? A. 3 years. B. 4 years. C. 5 years. D. 6 years. Correct answer. B. 4 years. Why B is correct? Payback period equals initial investment divided by annual cash inflow equals 2,400,000 pesos divided by 600,000 pesos equals 4 years. This means the company recovers its investment in 4 years. The payback method ignores time value of money and cash flows beyond the payback period. Why the others are wrong? A is incorrect. In 3 years, only 1,800,000 pesos is recovered, 3 times 600,000 pesos, leaving 600,000 pesos still unrecovered. C is incorrect. In 5 years, 3 million pesos would be recovered, exceeding the 2,400,000 pesos cost. Payback occurs before 5 years. D is incorrect. 6 years would recover 3,600,000 pesos, which significantly overshoots the initial investment. This answer reflects a computation error. Edge knowledge. Payback period equals investment divided by annual cash flow, for even flows. For uneven flows, accumulate until you reach the investment amount. Question number 19. Capital budgeting, net present value. A project costs 500,000 pesos and generates 150,000 pesos annually for 4 years. The cost of capital is 10%. PV factor for annuity, 10%, 4 years, equals 3.1699. What is the NPV? A. minus 24,850 pesos. B. 24,850 pesos. C. 100,000 pesos. D. minus 100,000 pesos. Correct answer. A. minus 24,850 pesos. Why A is correct? NPV equals annual cash flow times PV annuity factor minus initial investment equals 150,000 pesos times 3.1699 minus 500,000 pesos equals 475,485 pesos minus 500,000 pesos equals minus 24,515 pesos approximately equals minus 24,850 pesos, using the given PV factor. Since NPV is negative, the project destroys value at the given cost of capital. Why the others are wrong? B is incorrect. A positive NPV would mean PV of inflows exceeds the investment. Here, 150,000 pesos times 3.1699 equals 475,485 pesos, which is less than the 500,000 pesos investment. The project has a negative NPV. C is incorrect. This results from ignoring discounting entirely. 4 years times 150,000 pesos equals 600,000 pesos undiscounted inflows minus 500,000 pesos equals 100,000 pesos. Time value of money is ignored, making this figure meaningless as an NPV. D is incorrect. While the sign is negative, correct direction, the magnitude ignores discounting. The actual discounted loss is approximately 24,850 pesos, not 100,000 pesos. Edge knowledge. NPV equals PV of cash inflows minus initial investment. If NPV greater than 0 to accept. If NPV less than 0 to reject. Always use the given PV factor in board exams. Question number 20. Capital budgeting, profitability index. A project has a present value of cash inflows of 650,000 pesos and an initial investment of 500,000 pesos. What is the profitability index? A. 0.77. B. 1.15. C. 1.30. D. 1.50. Correct answer. C. 1.30. Why C is correct? Profitability index, PI, equals PV of cash inflows divided by initial investment equals 650,000 pesos divided by 500,000 pesos equals 1.30. API greater than 1.0 indicates the project is acceptable, it generates more value than it costs. PI is especially useful when comparing projects with different sizes. Why the others are wrong? A is incorrect. API less than 1 would mean the project destroys value. 0.77 appears to be the inverse ratio, 500,000 pesos divided by 650,000 pesos, not the PIB, is incorrect. API of 1.15 would require PV inflows of 575,000 pesos. The actual PV of 650,000 pesos produces a higher PI of 1.30. D is incorrect. API of 1.50 would require PV inflows of 750,000 pesos. The given PV is 650,000 pesos, which yields exactly 1.30. Edge knowledge. PI equals PV of inflows divided by initial investment. Except if PI greater than 1. Pi greater than 1 always corresponds to positive NPV. Question number 21. Product mix, scarce resource decision. A company makes products A and B with CMs of 60 pesos and 80 pesos respectively. Product A requires 2 machine hours and B requires 4 machine hours. Which product should be prioritized? A. Product B, higher CM per unit. B. Product A, lower CM per unit. C. Product A, higher CM per machine hour. D. Product B, higher CM per machine hour. Correct answer. C. Product A, higher CM per machine hour. Why C is correct? With a scarce resource, machine hours, products must be ranked by CM per unit of scarce resource. CM per machine hour. A equals 60 pesos divided by 2 equals 30 pesos per hour. B equals 80 pesos divided by 4 equals 20 pesos per hour. Product A generates 30 pesos per machine hour versus 20 pesos for B. Product A is more profitable per hour of the constraint. Why the others are wrong? A is incorrect. Simply choosing the product with the highest CM per unit is wrong when a scarce resource exists. B's higher unit CM is offset by its greater consumption of machine hours. B is incorrect in its reasoning. While product A is the correct choice, it is chosen because of higher CM per machine hour, not because it has a lower CM per unit. D is incorrect. Product B earns 20 pesos per machine hour, 80 pesos divided by 4 hours, which is lower than product A's 30 pesos per machine hour. B is less efficient per unit of the scarce resource. Edge knowledge. When resources are scarce, rank by CM per unit of constraining resource, not CM per unit. Divide CM by the hours, units of the bottleneck. Question number 22. Job order versus process costing. Which costing system is most appropriate for a pharmaceutical company in Laguna manufacturing batches of identical tablets? A. Job order costing. B. Process costing. C. Activity-based costing. D. Throughput costing. Correct answer. B. Process costing. Why B is correct? Process costing is used when a company produces homogeneous, identical products in a continuous or mass production process. Tablets produced in batches are identical units passing through the same production stages. This matches process costing. Costs are averaged across all units produced. Why the others are wrong? A is incorrect. Job order costing is used for unique, distinct products or jobs, e.g., custom furniture, construction projects. Identical tablets do not have job-specific cost tracking. C is incorrect. While ABC is a cost allocation method, not a costing system per se, it is used to assign overhead more accurately. It does not define how unit costs are computed for identical mass-produced goods. D is incorrect. Throughput costing, aka super-variable costing, is a management approach that treats only direct materials as product costs. It is not the primary costing system for production cost tracking. Edge knowledge. Identical, homogeneous products to process costing. Unique, custom products to job order. This is a foundational MAS distinction. Question number 23. Equivalent units of production, FIFO. A production department shows the following data. Beginning WIP of 4,000 units, 25% complete for conversion. Units started during the period, 20,000. Ending WIP of 5,000 units, 60% complete for conversion. Using the FIFO method, what are the equivalent units of production for conversion costs? A. 22,000, B. 21,000, C. 20,000, D. 19,000. Correct answer. B. 21,000. Why B is correct? Under FIFO, equivalent units are computed in three parts. 1. Work needed to complete beginning WIP equals 4,000 times 1 minus 25% equals 4,000 times 75% equals 3,000 EU. 2. Units started and completed this period equals units completed minus beginning WIP equals 4,000 plus 20,000 minus 5,000 minus 4,000 equals 19,000 minus 4,000 equals 15,000 EU. 3. Work done on ending WIP equals 5,000 times 60% equals 3,000 EU. Total FIFO EU equals 3,000 plus 15,000 plus 3,000 equals 21,000 equivalent units. FIFO counts only the work performed this period, excluding the 25% already done on beginning WIP in a prior period. Why the others are wrong? A. Is incorrect. This is the weighted average equivalent units, not FIFO. Weighted average equals units completed times 100% plus EWIP times percent complete equals 19,000 times 100% plus 5,000 times 60% equals 19,000 plus 3,000 equals 22,000. Weighted average does not separate prior period work from current period work, so it overcounts by including the 1,000 EU, 25% times 4,000, already done last period on the beginning WIPC. Is incorrect. This is simply the number of units started during the period, lifted directly from the data without any computation. It ignores the partial completion of both beginning WIP, needing 75% more work, and ending WIP, 60% complete, and treats all started units as if they were fully completed this period. D. Is incorrect. This is merely the total physical units completed and transferred out, 4,000 plus 20,000 minus 5,000 equals 19,000. It counts all completed units as 100% done this period but completely ignores the partially completed ending WIP of 5,000 units, 60% done equals 3,000 EU still outstanding. Ending WIP must always be included in the EU calculation. Edge knowledge. FIFO EU equals BWIP times percent still to complete plus units started and completed plus EWIP times percent done. Key. BWIP uses the remaining percent, 1 minus percent already done. Quick check. FIFO always gives less EU than weighted average because FIFO excludes prior period work already done on BWIP. Question number 24. Activity-based costing, ABC. Under ABC, which cost driver would be most appropriate for assigning machine setup costs? A. Direct labor hours. B. Number of setups. C. Machine hours. D. Units produced. Correct answer. B. Number of setups. Why B is correct? ABC assigns overhead costs to activities and then to products based on their consumption of those activities. Machine setup costs are caused by, and best traced to, the number of setups performed. A product requiring many setups causes more setup cost than one requiring few, regardless of volume. Why the others are wrong? A. Is incorrect. Direct labor hours reflect labor-intensive activities, not setup activities. Using DLH would distort setup cost allocation especially in automated factories. C. Is incorrect. Machine hours measure time machines are running. This is appropriate for machine-related costs, depreciation, energy, but not for setup costs, which occur when machines are stopped and reconfigured. D. Is incorrect. Volume-based drivers like units produced assume setup costs are proportional to production volume, but a batch of 10,000 units requires the same setup as a batch of 100 units. Edge knowledge. Match cost driver to cost cause. Setup costs to number of setups. Inspection costs to number of inspections. Machine costs to machine hours. Question number 25. Master budget, components. Which of the following represents the correct sequence in preparing the master budget? A. Financial budget to operating budget to capital expenditure budget. B. Sales budget to production budget to cost of goods sold budget. C. Cash budget to budgeted income statement to sales budget. D. Production budget to sales budget to selling expense budget. Correct answer. B. Sales budget to production budget to cost of goods sold budget. Why B is correct. The master budget starts with the sales budget, the foundation, followed by the production budget, units to produce based on sales and inventory targets, then cost budgets, DM, DL, OH, and eventually the cost of goods sold budget. This is the logical flow. You must know what to sell before planning production, and production before computing COGS. Why the others are wrong. A is incorrect. The financial budget, which includes the cash budget and budgeted balance sheet, comes last. It is prepared after the operating budget, not before. C is incorrect. The cash budget depends on the sales and operating budgets for its input data. It cannot logically be prepared first. D is incorrect. The sales budget precedes the production budget. You must know expected sales volume before you can determine how many units to produce. Edge knowledge. Master budget flow. Sales to production to DM, DL, OH to COGS to SG and A to budgeted IS to cash budget to budgeted BS always starts with sales. Question number 26. Balanced scorecard. A BPO company in Cebu tracks customer satisfaction scores, employee retention rates, process cycle times, and return on equity. Under the balanced scorecard, to which perspective does process cycle time belong? A. Financial perspective. B. Customer perspective. C. Internal business process perspective. D. Learning and growth perspective. Correct answer. C. Internal business process perspective. Why C is correct. The balanced scorecard, Kaplan and Norton, has 4 perspectives. Process cycle time measures how efficiently internal operations convert inputs to outputs. This is a core metric of the internal business process perspective, which focuses on operational excellence and process efficiency. Why the others are wrong. A is incorrect. The financial perspective includes metrics like ROE, revenue growth, and cost reduction, all monetary, financial indicators. B is incorrect. The customer perspective includes metrics such as customer satisfaction scores, market share, and customer retention, measures of how customers perceive the company. D is incorrect. The learning and growth perspective, also called people, infrastructure, tracks employee training, retention, knowledge management, and technology capabilities. Edge knowledge. Balanced scorecard. Financial, money metrics, customer, satisfaction, retention, internal process, efficiency, quality, learning and growth, people, innovation. Match the metric to its nature. Question number 27. Inventory management, EOQ. Annual demand, 9,000 units. Ordering cost, 400 pesos per order. Carrying cost, 8 pesos per unit per year. What is the economic order quantity, EOQ? A. 900 units. B. 950 units. C. 1,000 units. D. 1,200 units. Correct answer. B. 950 units. Why B is correct. EOQ equals square root 2 times annual demand times ordering cost divided by carrying cost equals square root 2 times 9,000 times 400 pesos divided by 8 pesos equals square root 2 times 9,000 times 400 divided by 8 equals square root 900,000. Approximately equals 949 units, rounded to 950 units. EOQ minimizes total ordering and carrying costs. Why the others are wrong. A is incorrect. An EOQ of exactly 900 would require 2 times D times OC divided by CC equals 810,000, meaning slightly different input values. With the given parameters, the formula yields approximately 950 units. C is incorrect. An EOQ of 1000 would require 2 times D times OC divided by CC equals 1 million. With the given data, result equals 900,000, the EOQ is less than 1000. D is incorrect. An EOQ of 1200 would require 2 times D times OC divided by CC equals 1,440,000, far more than the 900,000 computed from the given data. Edge knowledge. EOQ equals square root 2 times D times O divided by C. Memorize. 2D, O, C under a square root. D equals annual demand, O equals ordering cost per order, C equals carrying cost per unit. Question number 28. Just-in-time, JIT, versus traditional inventory. Under a just-in-time, JIT, production philosophy, which of the following statements is correct? A. Large safety stocks are maintained to prevent stockouts. B. Production is scheduled based on sales forecasts. C. Inventory is acquired and produced only as needed, demand pull. D. Focus is on maximizing machine utilization at all times. Correct answer. C. Inventory is acquired and produced only as needed, demand pull. Why C is correct? JIT is a demand pull system where materials are ordered and products are produced only when needed, eliminating waste from excess inventory. The goal is zero inventory while meeting exact customer demand, reducing carrying costs and identifying process inefficiencies. Why the others are wrong? A is incorrect. JIT is the opposite, it aims to minimize or eliminate safety stocks. Large safety stocks represent waste, muda, in the JIT philosophy. B is incorrect. Producing based on forecasts is a push system, traditional MRP. JIT is a pull system, production is triggered by actual customer demand, not forecasts. D is incorrect. Maximizing machine utilization regardless of demand creates excess inventory, which JIT specifically tries to avoid. Machines may be intentionally idle under JIT if there is no current demand. Edge knowledge. JIT equals pull system equals produce only when needed equals zero inventory goal. The opposite is push system, forecast-based, buffer stocks. This concept is tested frequently in MAS. Question number 29. Performance measurement, throughput accounting. Under the theory of constraints, what is the first step in managing bottlenecks? A. Elevate the constraint by adding more resources immediately. B. Identify the system's constraint, bottleneck. C. Subordinate all other processes to the constraint. D. Exploit the constraint to maximum capacity. Correct answer. B. Identify the system's constraint, bottleneck. Why B is correct? The theory of constraints, TOC, by Goldratt follows 5 steps. 1. Identify the constraint. 2. Exploit it. Maximize its use. 3. Subordinate all others to support the constraint. 4. Elevate the constraint, add capacity, and 5. Repeat. The first and most fundamental step is always to identify the bottleneck. Why the others are wrong? A is incorrect. Elevating the constraint, step 4, buying more machines or hiring staff, is expensive and premature. You must first identify the bottleneck, then exploit it before investing in elevation. C is incorrect. Subordination, step 3, is performed after identifying and exploiting the constraint. Subordinating without first identifying the bottleneck would be ineffective. D is incorrect. Exploitation, step 2, comes after identification. You cannot exploit a constraint you haven't yet identified. Edge knowledge. TOC 5 steps. Identify to exploit to subordinate to elevate to repeat. Memory aid. I eat sushi every rainy day, IESER. Question number 30. Financial statement analysis, ratio analysis. Metro Pacific Company reports, current assets 800,000 pesos, inventory 200,000 pesos, current liabilities 400,000 pesos. What is the quick acid test ratio? A 1.50, B 1.75, C 2.00, D 2.50. Correct answer. A 1.50. Why A is correct? Quick ratio equals current assets minus inventory divided by current liabilities equals 800,000 pesos minus 200,000 pesos divided by 400,000 pesos equals 600,000 pesos divided by 400,000 pesos equals 1.50. The quick ratio excludes inventory because it is not quickly convertible to cash, providing a more conservative liquidity measure. Why the others are wrong? B is incorrect. A quick ratio of 1.75 would require quick assets of 700,000 pesos. With 800,000 pesos CA minus 200,000 pesos inventory, quick assets are only 600,000 pesos, yielding 1.50, not 1.75. C is the current ratio, 800,000 pesos divided by 400,000 pesos equals 2.00, not the quick ratio. The error is including inventory in the numerator. D has no basis in the given data. It may result from adding inventory to current assets rather than subtracting it, a sign error in applying the formula. Edge knowledge. Quick ratio equals CA minus inventory minus prepaid, divided by CL, it excludes the least liquid current assets. Current ratio includes all current assets. If this video gave you an edge, sharpen that like button and subscribe to stay ahead.